All right, so let's get going.
Deb's in.
Perfect. Yay. My apologies, Deb. I'm so sorry. I thought I had sent a link, but it's sitting there in the outbox, and you know how that works in the electronic world. So today's shift tactic is shift tactic number 10, which is about creative financing. So I didn't, number one, I can't imagine having two better positioned people to have that conversation than Deb and Lisa. So what we're going to do is we're going to walk through the PowerPoint a little bit and walk through what sellers can do in a shifting market when they need to come up with creative solutions, what buyers can do, and then what lenders can do. Does that sound good? Is anyone walking through a challenging transaction that you need to get creative on how to get the deal to close? Larry, yeah?
I say Larry, come on, Larry.
Well, no, I wasn't shaking my head. Yes, you have to remember I did mortgages for 4 years. So,
perfect. Good.
But I did use some creativity in a deal I just got accepted.
So I think that's where we're in this weird limbo that some of the lending policies have changed a little bit. And Deb, you can speak a little bit to that. But and we've seen some DFTs, but I'm not sure if getting more creative might have saved some of those deals. And where are our guardrails for such creativity, right? So we'll speak to that, and we'll walk through some of these options. Sound good? So I'm going to share my screen, make sure that you guys can see it. If you can't, let me know. I think we'll be good to go here. So we're going to start with what sellers can do in a changing market. So would we all agree that the market is in a state of flux?
A little bit, yeah.
Okay. Who else? This is going to be a completely interactive, hopefully 45 to 50 minutes. So market's still incredibly good, incredibly strong, but do we agree that there's a little bit of change?
Absolutely.
Yeah.
Okay. All right. So let's walk through some of these scenarios that these slides were created out of shift tactic number 10. Shift was written in 2010. So as we've already kind of walked through with Lisa, some of these are not applicable for us in the state of Arizona, but we'll let you know what you can do, what you can't do. So we'll start there. And I need to click on that. Perfect. Okay, everybody got it?
Mm-hmm.
All right, good. There we go. Seller contributions, what, when, and how. So has anyone run into a scenario where the seller had to, you had to come to the seller to see if they could change the deal so they could get the deal to close? Yes, no.
Normally, they're just asking for contributions on the initial contract nowadays. So I think that's
talking about contributions or concessions, right?
Right. They're same. They're the same. Yeah. Yeah.
So is there a scenario that
you're looking for an example?
You're going to have sellers that are unwilling to make that concession, correct?
Absolutely. Yeah. Or there could be situations where you're coming down to the end of the transaction and for whatever reason, the buyer may be short of funds. Something unexpected came up on with the lender. They need to come in with a little bit more money and they don't have it. In that situation, you could ask the seller to contribute with lender approval and still get that deal closed.
Awesome. Experience, you guys had that experience, yes?
Yeah, I mean, if you'd like an example, I'm in one right now.
Okay, yeah, throw it on.
So here are the parameters. The house was listed at 160. The buyer needed concessions, and so the house had a price reduction. So to avoid fear of or lessen the fear of an appraisal problem, knowing that there was a price reduction and hopefully the listing agent had priced it properly, we went in and offered above that 160 list price, but then asked for the concessions as part of the deal. So what we were doing was try to deliver to the seller the listed sale price. So we went above the listed sale price, but then asked for the concessions in a home warranty almost equal to how much we were above the list price, so that the seller would be able to see that they're in the end still at their list price and hopefully get the deal accepted at that.
Yeah. The seller did the same, basically.
Yeah, so that was a way, because we also knew that at that sale price, that house could have 3 offers in the next hour because of, that sale price and how quickly things are moving. So to A, get the buyer their list price, B, potentially ward off other potential offers that might have not quite been as aggressive. People going in at 160 because that's the list price, and then try to do the 1 or 2% of the market average for below, that whole thing. We were fortunate to be able to go in strong enough to set the deal up like that. Excellent.
Good job. Seller funded permanent buy downs. Seller will pay up to 2% of the sales price and closing costs.
I'm going to let Deb talk about this. It's not as common with the interest rates the way they are now, but we used to do it all the time, and it's a great tool. So I'll let Deb, if she wants to speak about this, talk about that.
Yeah, it's something obviously that is not utilized in that much, number one, because rates are so good right now. So paying a 0.1% cost to lower the rate by 1/8, I mean, the nickel and dime back and forth, but a lot of times going back to, we might have customers that are so tight on their ratios that even from the get-go, we know what their taxes are going to be, but we're telling them your insurance policy on that house cannot be more than $600 because we used $50 a month for your HO for your homeowner's insurance, for example. So in those situations, we might have to lower a rate by 1/8 because maybe that $6 a month in the payment keeps the ratio in line. But as far as, I don't see customers, even myself as a loan officer, I don't see this 99% of the time in paying to get a rate, or I always say, what means more to you, $1,500 or $6 a month in your payment,
Right. Is there a rate that we would need to get to where this would be more of a viable option?
Oh, I would say if rates went back up into the 6% range, for example.
Okay.
Anything over 6, probably you would see it. We saw it a lot when they were at 16.
Yeah.
Right.
But don't see it very often.
So file that away in your brains, and if interest rates start to go up, you need to dust this out, dust this off and employ this as a tool to get to closing.
Right. Or like Deb said, if it's so marginal that $15, $20 a month makes a difference, then this situation that could be viable.
Here would be another one where I would say this is not done enough. That don't forget, when dealing with FHA or VA buyers, that FHA MIP, mortgage insurance premium, that 1.75, that can be paid in cash. It does not have to be financed. That would be a good place to utilize seller concessions. And even with that VA funding fee, you're already at 100% financing. Your first time users, that's at 2.3%. That would be a good place for a seller to pay cash instead of it being financed. So don't forget those 2 options, because those are very viable and often forgotten about. So
awesome. That's great. All right. The next option is seller funded temporary buy downs. So it's interesting to see that there's a stagnant market, not applicable to us, right?
Right.
Enticing buyers is difficult, not applicable to us, right?
That's when you need it over a year. Like if you're on the market for a year, you need something to spur your listing to be sold. This is, maybe something.
That would be a tool to use at that juncture. Okay, what about owner financing?
It's still a viable option. It's not as common because a lot of people don't have equity in their homes or don't have them paid off in our market.
Right.
But it's something to think about. If you are out prospecting and someone has a home that's free and clear, I would bring that up as a listing agent to say, listen, this is another avenue for an income stream for you. You can charge above market rate interest and have an income stream.
And I'm suspecting that number is probably down just because of the amount of moving people are doing, and the vast predominant amount of people do not fully own their home free and clear.
Yeah. But I've had clients in the past that have done that as a revenue stream. They've had a couple of properties that have been paid off, and they're getting 2 or 3 points above market rate.
Oh,
It's
wow.
an absolutely great way to utilize your assets because you can't get that anywhere else right now.
Okay, good.
What's really cool about that too is it's the concept of owning rental property, but since you don't actually, you still own the property, but on paper you have somebody in the property, you really aren't faced with the rental issues, repairs,
Yeah.
things like that, because you're in a sale contract and so on. So that's a pitch to someone to say, hey,
Attractive, yeah. As long as you get a decent down payment, and I've actually had quite a few listings where the seller is hoping they get it back, that the buyer defaults, because then they get to, and it sounds rude kind of, but they are hoping that happens because then they've got the down payment that's theirs, plus then they get the property back and they can do it again. And I did have one that was a little challenging that we did get back twice. And I got listings each time. I mean, it worked for me as well. But yeah, there's always, you just have to keep your mind open on these things.
This was a real selling point when we were doing in Mexico. Granted, it doesn't apply here, but just the concept in Mexico was the same thing. The owner financing is really the only way that we were selling down there. But that was the whole thing. Hey, if they default, you get the property back and start over, and you keep all their money. And like, okay, we'll put it up for sale.
Yeah. Mm-hmm. Awesome. So I believe the next.
I'm sorry, I'm just going to ask, what would typically be a decent down payment? What do you see?
Again, it's up to your seller. I would probably personally not do it with less than 10% down. It depends on the price point of the property too. What are you willing to give up? Because you may get a property back that's not instantly saleable.
Right.
They could trash it. If they can't make their payments, they may not be maintaining it as well. So what are you willing to give up? That's where you.
Yeah, you need to get enough down to be able to do massive repairs to get it ready to go back to market.
Right. What's it worth to you? And so I would probably say 10% most of the time on something like that.
Perfect.
Okay, good to know. Thanks.
Yep. Contract for deed. Then you say that not applicable.
Yeah. No. It's not ideal, because what happens is you're not protecting the buyer at all. The property does not transfer until it's paid in full. So technically a buyer is making payments to the seller, who is making payments maybe.
Yeah, right.
It's a little different than a wrap. So we're assuming they already own it outright at this point. But no, I'm just saying a hard no on that one in our market.
Your broker says a hard no, so we're going to go hard no. Seller seconds. Yeah.
That's always a great tool, and it's overlooked a lot in our market. Again, these are all lender approval kind of items. Deb would have to get involved in that. You need to find out if they qualify for both of those loans, because with the seller, they still have to, with the seller contribution or carryback, they still have to qualify for both of those. So I've used it quite often if they want to get out of their PMI, if they want to, there's various reasons for it. And Deb could probably speak more to this as well.
Yeah.
And here again, it's a nice creative one that isn't utilized as much anymore, because if they've got good credit, a lot of times that mortgage insurance payment isn't adding that much to their payment. But the flip side of that, the seller carryback, they are going into a position, and B, they don't get to their terms, so that then it is very much, it has to be within guidelines, so forth and so on. So usually when it's a first and a second, they're searching out the second from their bank, their credit union, something to that effect. Where we're seeing first and seconds more now is in the jumbo market. So even though the conforming loan limit is up to $510,400, it's a lot of times easier getting a conforming product than it is going into that jumbo market, where you have to have payments in reserve, much higher credit score, so on and so forth. So
plus it jumps them up by almost a point, doesn't it, to go from?
Believe it or not, jumbo rates are very, very close to conforming rates.
Okay, good.
And sometimes, lenders are actually what we call buying up the market,
Oh, wow.
where their rates are going to be the same, sometimes even less than a conforming. So doesn't happen very often, but we've seen it. And that's where I'm going, take it and run, because I can't touch that.
Right. Yeah, exactly. Okay, good.
I see seller carryback or seconds on land more than on residential.
Yeah, and in fact, that's what I always say when people call me on land, because land financing is just ridiculous when you're coming to a bank, credit union, anything like that. It's
Yeah.
my first thing. Are you sure the seller's not willing to do some short-term financing for you?
Yeah.
Okay. Let's see here. What the next option is, lease with option and lease purchase.
Again, very risky for the seller and for the buyer both. In this situation, we don't have a lease purchase contract anymore for that reason. It became so problematic that they eliminated it. What you would need to do is do a purchase contract with a closing date in the future, and then do a lease contract in the meantime. So they would have both in place. Honestly, if that is their only way to do this, they probably aren't ready to do it yet.
Right.
It's not ideal.
It seems like the environment that this would be used is not applicable. I mean, no, we're not in a slow market,
Right.
And we're not with a small pool of buyers.
Right.
So
It's not going to benefit the seller unless we can't sell.
exactly. Right. Selling to relatives. Ooh, yikes.
That can be good. It can be really good.
It can be good.
It can be really bad.
It could also make Thanksgiving very awkward,
Yeah.
you know?
Yeah.
And don't forget that every loan type has very set parameters on what we call the identity of interest.
Yeah.
And it even comes into play when a buyer is buying the house that they've been renting. That's an identity of interest, whether they're related or not. So definitely, if a mortgage is involved in some way, shape, or form, you need to make sure your loan officer knows the parameters of an identity of interest, period, cut and dry. Please, please, please make sure that you're dealing with, and everybody knows, check your guidelines, because the only loan type that does not have parameters for an identity of interest is VA. That's it. Every other one is very strict, very, very, very strict. So I can't say it enough. I personally have helped several people do sales, and my bottom line all the time is the seller, how much money do you want in your hand? That's usually where I start.
What's the net? Exactly.
What do you want in your hand? I helped my relatives in Minnesota, and it was a $1 million house that my cousin got for $500,000, you know. And
Nice one.
but there again, I was very specific. Auntie and Gary, how much money do you want in how much do you want in your hand? And they got exactly what they wanted in their hand. So everybody was happy. So
Excellent.
In our situation, it's a little different, because are you listing it, or is it going to go into MLS, or are you waiving your commission? I mean, there's other things to take into consideration that may affect the price, the final.
correct.
The seller.
Exactly. Yep.
Okay.
So
Excellent.
help.
What about wraparound mortgages?
No.
Mm-mm.
Yeah.
No.
Every
Nope.
loan
Because
nowadays
if
has
it
to
gets
do
called,
on
if it
sale.
gets called, yeah, somebody's going to be in a world of hurt. Don't do it.
Okay.
And if you can get a variance occasionally. It's difficult to do. There's really, again, where I see this is with flippers, and they're trying to avoid paying off that mortgage so they sell it. It's illegal. It's illegal. It's not illegal for the buyer. It's illegal for the seller. So don't do it.
Don't do it. Deborah Weirson, don't do it.
Do not do
Okay.
it.
Just write that down. Write it down. All right. So now let's transition to what buyers can do, right? In this changing market. Use a 401k.
Yeah, they have, it's my understanding now, don't quote me, I'm not a CPA, but they have 3 years that they can pay without it hitting them in the, for taxable income. So, but I always say, buyer beware. If you're borrowing from your 401k, make sure that you talk to your CPA and make sure you have also talked to your administrator of your 401k. Both. Make sure you know what you're getting into,
Yeah.
because you don't want to get hit with that as taxable income.
Yeah, you're going to get that notice come January, February, and it's like, uh-oh. Yeah.
Yeah, uh-oh's right. Writing a big check.
Also, you don't want to end up retiring and not being able to support yourself either. The home. That's, you know,
You're going to have such a nice house, though.
yeah, because you can't pay for it. Yeah.
That's right.
Yeah.
All right. What about temporary IRA transfers?
Again, talk to a tax professional. I don't necessarily recommend that, but
So I love the challenge. They found the right house, which, right, that's the buyer. We found the right house. It's a little more out of our price range, but we can pull out of our IRA. Yeah. So again, we're being the source of the source, right? Talk to your financial advisor and get clarity on what that means.
and these are conversations to have at your buyer consultation. What are what's your down payment source? What happens if you don't have enough? Where are you going to get that? Because these aren't instant transfers anyway. They don't happen in a moment. And you probably won't get that property if you're waiting on this.
Yeah, good point, Lisa. Very good point.
Excellent. Appraisable assets for down payment and closing costs?
Nothing worse than somebody selling an asset and they did not keep any trace of it.
Yes.
Once again, I've had an RV sold. It was down the road and they're chasing this person down the road to bring them back, to get a bill of sale, transfer of title, so on and so on and so forth. So
you need a paper trail. You need to be able to prove the value and the transactional history of that.
Yeah, absolutely. It can be done. It's okay if we know about it right from the get-go, but if we don't, this is not fun. This is not fun.
Yeah, I would assume getting into this in the middle of a transaction is going to be difficult for a while.
How long for seasoned funds for this, Deb? What do you consider enough time period?
Well, it depends upon. I always say we have, for the most part, we're always getting at least 2 months bank statements. But sometimes just did it, then that's one that's 2 months old will show a zero balance, and then it'll be, even though that $50,000 deposit isn't there, the beginning balance on that 2 months ago was 0 and now it's 50.
Right.
So sometimes it's 3 months worth of bank statements.
Okay. Pledged asset mortgages, a PAM.
I've actually never done that. Never heard of it.
So you're probably saying the buyer's having trouble saving, interest rates plus mortgage interest cost make monthly payments too high. Affordability is an issue, which is not an issue in our area. Prices are up and concessions are down in the current market.
I have no idea what this
It doesn't apply to our market.
So you don't know PAM. We'll move on. Equity transfers and bridge loans.
That's not as common. We used to do bridge loans all the time. When people were waiting to sell until they bought, we had bridge loans all the time. We're not seeing that as often anymore. We don't have a lot of contingent transactions anymore.
Right. And I think the thing with this, the bridge loans, when bridge loans first came out years ago, we didn't have to hit them with that payment. That was the beauty of it. Now you are still qualifying for both.
Yeah.
Deb, can you explain what a bridge loan is for some of our newer agents that may not know?
They've got a property in Minnesota, for example, and now they're going to be living in Arizona full time. So that house in Minnesota is up for sale. They've got a lot of equity in it, and they want to use that equity to buy this house. And that equity loan is basically what it is. It's,
okay.
It's an equity loan.
Yeah.
And it's paid off when they close on the first property.
Yeah, they should really do away with the term bridge loan, because it's a full-on equity loan. You're making payments on that. Yeah. Whereas a true bridge loan You didn't have to make payments during that time frame when that house was up for sale.
And there is a limit to that time frame too. That's what people don't realize. It's not indefinite. It's usually a lot of them I saw were like 6 months to a year.
Yeah.
Yep.
Awesome. Down payment sources and gift funds. So again, this is for buyers.
It's a good opportunity for people, but there's so many caveats and things they have to. I'm going to let Deb speak to this as a lender, but there's ways to do it.
Oh yeah, definitely. There's, I would say close to 50% of the loans we close have some type of gift funds given to them in some way, shape, or form, whether it was before they even met with us or during the process. We know that it's coming from a family member, and every loan type, you have to be able to document the relationship. And FHA is the only one that will allow you to document that it's not if it's not an immediate family member, what is the relationship? So yeah, we've been known to have to get pictures and so forth and so on, showing that, yeah, they really do indeed have a relationship.
Oh,
There
wow.
are indeed some employers that gift.
Right. That's the next slide. Good
Okay,
job.
there you go.
Can I touch on this as a broker for a second?
Please do.
Make sure if they have a gift letter or gift fund letter that it is not a loan. That is loan fraud. It's not okay to do that. So if they can't buy and if it's really not truly a gift, then show them things in their price point that they can afford. But don't encourage loan fraud, and make sure that you tell them that it is fraud.
Yeah, you're saving yourself a lot of headache just by being the professional consultant and going the fiduciary to them and saying, your price range is here. It's not quite here.
Well, I think sometimes people don't realize that that is against the law. It is fraud, and it's not just something you put on a piece of paper and you walk away from. It can follow you, and you can go to jail if you lie.
We don't want to go to jail.
No.
No one on this call wants to go to jail, correct?
Nope.
Not even Tess. All right, so I lied. Not this slide, but it's the next one. Non-occupant co-borrowers.
Mm-hmm.
Very interesting. So buyer's a young lady with an internship. Rental market outpaces the monthly mortgage payments. Demand is starting to push prices up, which is clearly where we are. Father frequently advises her to buy.
I love the sexist nature of this slide.
Yeah. Yeah. I didn't make the slides.
Yeah.
Clearly. A non-occupant co-borrower. So is that something you've ever seen, Deb?
Oh yeah.
Okay.
So again, we've used the term over and over, is a kiddie condo type thing. What's different right now with the COVID-19 is it has to fire an approval in our decision engine. So a lot of times the owner occupant, the kid going to college, for example, they have no credit, no job, no nothing. Mom and dad are the ones that are the non-occupant co-borrower, and it's on their strength. We've gotten those approved in the past. Right now, they're not firing an approval because
Oh, wow.
the daughter doesn't have any credit. It'll be coming back.
Yeah.
There's no doubt of this will be coming back. It's very commonplace. So yeah, right now we can't do it. And
Right.
I don't know, we've searched out other lenders too. So hopefully by June 1st, this will be back.
That'll be a viable option.
Yes.
Okay.
Yes.
And then lastly, what you were mentioning, the employer assistant mortgages.
Mm-hmm. Yep. And it's not them assisting the mortgage. They actually have something in their HR manuals that it is commonplace, and they do indeed do this. They can't just do it for one employee. They have
Right.
to prove that it is a company standard that they do this for their employees.
Yeah.
I'm suspecting that this is a talent acquisition piece of the puzzle. If you're trying to find the biggest talent, I would assume like a Raytheon or someone may have something like this employed because they can go and hire the best talent.
Or the flip side, again, this is just part of their employee package. So it's not something that they're doing for just one employee.
Right.
Right.
Yeah, it has to be entity-wide.
Right.
Correct.
Okay. All right. Transitioning. So Deb, you're going to lead. What can lenders do? Lender funded buy downs.
Absolutely. Like I said, over and over and over again, we really don't want to lose a loan to rate. Both Aaron and I are going to do whatever we can if there's somebody out there that's beating us up on rate. But sometimes there's something where we're like, yeah, you got to take it down the street because we're going to owe the company money and we just can't get it approved, period.
Yeah.
But we definitely want to know what our competitors are doing. And I know that right now we're quoting on today because we're starting to service our own loans. That just came out.
Wow.
Yeah. So as of right now today with a high credit score, our FHA and VA today, we're at 3.375.
Wow.
30
Okay.
So again, I can't say it enough. We want to be your first call, but we can't win them all. We can't win them all.
Right. What's highest credit score?
Highest credit score is 840.
No, I'm saying what to qualify. You said a high credit score. What is that number?
For those rates, 720 and greater.
Okay.
You're still going to be in a 3.5. So
yeah.
I always say, don't get caught up in that rate ego. It's never worth it. It is never, ever, ever worth it.
Yeah.
Rates are so great. I mean, even if you're in the,
If you're below 4%, come on. This is,
yeah, right.
I know you can't lose right now.
you cannot lose. You cannot lose, right?
What about My Community Mortgage? Never heard of this.
Yeah. And the only ones that I keep up on, quite frankly, are when the Pathway has money available and the Pima County bonds. So
Okay.
those truly are the only ones that I stay up on. As far as Movement Mortgage, I know that they're working on their 100% financing. Part of the Community Reinvestment Act, they always have to have a CRA on the books. So they're working on one for the state of Arizona. It's not in play at this point in time, but yeah.
Your experience with Pima County, can you describe to these agents how do they access, or is it even accessible at this juncture? Probably is not.
Right now, it is not. Again, there is no down payment assistance programs that I know of that are open and functioning right now during this shutdown.
Yeah.
So, and a lot of times too, I'm very cautious with these. I want to make sure that homeowner knows you are in this house for a minimum of 3 years. Some of these are longer than 3 years.
Mm-hmm.
Yeah.
And some of them go up to 10 years. And
You have to pay it back. Yeah.
absolutely. And read everything you get. Yeah, without a doubt, because there is no such thing as free
Free
money.
lunch. Yeah.
Free money.
Boom. What about leveraging automated underwriting systems? Market's hot, rates are stable, prices are rising, fewer people are qualifying.
I don't see that fewer people are qualifying. In fact, we already went back to our minimum credit score of 620 as opposed to 640.
Okay.
Can we get people in with credit scores less than that? Yes. I would just assume, me personally, I would rather see them work on their credit and get their credit scores up. But in the same sense, the markets are hot. If they're paying $1,200 a month rent right now, yeah, let's get them in a house.
Okay.
Right now, what holds true still, though, to this day until they lift, if it does not fire an approval in the decision engine, our underwriters are not doing what they call credit scoring, where they go deep into the file, and if they match all of this, they'll still approve it. it has to come up approved in the decision engine. So that's where it's
Gotcha.
at.
What about adjusting amortization periods?
As in going from using an adjustable rate mortgage and or putting somebody into a 20 or 15 year. Looks like it's putting them into a shorter mortgage.
Yeah.
I actually had a lengthy conversation with somebody yesterday, and of course she was talking to her father.
Yeah.
Sexist as it may sound, but
yeah.
her dad was saying, you should only do a 15. You should only do a 15. I'm going, I am so sick of people that love Dave Ramsey. I wouldn't be doing mortgages if all we did was 15 year.
Right.
Now,
You
do I
can pay it
believe?
off at 15 and do it over 30. I mean, you can pay extra.
And that's exactly was my conversation with her. I'm going, so how much more disposable income do you think you'll have at the end of every month? And she's like, maybe $200 a month. And I go, if you want to pay this off in 15 years, it's $500 a month. The calculation that I did for her. And she goes, you're kidding, you're kidding. I'm going, no. I said, truly in my mortgage career, I don't put that many people into a 15-year mortgage unless they are really wealthy, because you don't know when something may happen. And let's face it, there's a lot of people right now that something's happening and they're not prepared for it at all.
That is so very true. What about adjusting interest rates to cover closing costs?
Yeah, absolutely. We don't do that very often, but without a doubt, that's one where I'm going, oh, darn, where am I getting beat up on rates and this, that, and the other. And, a lot of times, even like our lender fee adds up to $1,315. Well, you take that divided by $100,000 loan amount, I can increase the rate by 1/8 and cover that fee.
Right.
And it's gone. So, yeah.
Okay.
Mm-hmm. I just want to know what am I up against?
Right.
And they
That's what it comes down to.
and talk to you about it. The worst thing is to then get a phone call from your client and say they don't understand why that happened and why they're paying more. You're doing them a service, and they need to understand why that's happening.
Well, that should not happen.
It should not happen, and with you, it never does. But I'm just saying,
No, we're eating it. Period. I mean, our lock desk, our everything is like, nope, yep, just get that one because you can't pass that on to the buyer.
Yeah.
Mm-hmm.
Not doing it.
We
mentioned state, province, local government grant bond programs. Right now, they're all on hold.
Correct.
So any anticipation of when those might reopen or be refunded?
Oh, I would think June 1st is what I've heard. But
okay, that's good to know. So you guys need to be keeping these dates in your mind. So when you're having conversations with your buyers about timelines. Mortgage credit certificates.
Boy, it's one that I don't use this. And the reason I don't is because they have to file this with their tax returns every year to continue with the benefit of this. The beauty of the MCC cert is that I get to use that reduction right off of their payment. So it's sometimes it does work out very well for the customer. Where it doesn't is, again, nobody pays attention to the details. I'm telling you, it doesn't matter how many times you tell them. It doesn't matter that you call them on April 15th and remind them, oh, I already filed my tax returns. Well, you're going to have to amend them, and you're going to have to file the MCC cert, to continue with the benefit of this. Yeah, so it's good. It's not utilized enough. It's not.
Okay. Expanded alternative lending.
It's like subprime, right?
And again,
Is this from a guy in a black leather jacket in the back area? Is that what? Okay.
Aaron and I have a couple of mortgage brokers, and we've got a long list that are approved through Movement Mortgage that we work with, but our list is pretty short because they need they need to be responsive to us so we can be responsive to our client, because in the end, it is us. And nowhere is Aaron and I going to say, well, the mortgage broker. No. We have to know what we're doing, and we're relaying that on.
Yeah, and hard money could fall into this category as well, but that's usually for short term, not for, permanent
Correct.
financing, and it's risky.
Hard money would be considered private lending, right?
Yeah.
Yes.
Oh, there we go. Okay.
Yeah.
I didn't see that slide coming up.
Yeah, no, we hadn't gotten there yet. It was coming up. So
And you as real estate agents are probably going to know more of what is available out there than I am.
yeah, right.
I know that when I've worked in smaller towns in Tucson, I knew who these private lenders were. And so I would be in contact with them. But in the same sense, here's another one where I was really talking to the customers. Don't you miss a payment, because this hard money lender is a lawyer.
Mhm.
And you miss one payment, they will take the property back.
Absolutely.
Here it is in fine print right here. So don't mess around. You're getting into something, and don't miss a payment. That's all I'm telling you.
Don't do it.
So many people can qualify for conventional or any or other mortgages right now. There's very little reasons to do this unless you can't qualify at all. Like maybe for flipping or something like that, where they just literally going to turn it over in 3 months or something. But even then, that's risky. What if you bought one 3 months ago and look where we are right now? You may not be able to sell it as quickly. So there are risks involved.
Yep,
I agree.
absolutely. Lastly, no documentation programs.
I don't have a one. Not even with my mortgage brokers. I don't have a one that is nothing. Meaning
Okay.
no credit, no assets, no income. Yeah, you're gonna have to have something, and it's usually a really good credit score. But even the no doc programs now, almost all of them are bank statement programs. So
Yeah, right.
and that's just a mess. I mean, one bank statement that has something on it that you can't justify, you're out the door. Yeah,
Oh,
they're
wow.
a mess.
Okay. So that is like last resort.
I'd rather you go to a hard money lender.
Okay. Awesome. That's good to know. All right. Last thing here. So bottom line, opportunities exist. You got to find them. We would all agree with that, right? Apply more than one technique to the same transaction. Sounds like, Larry, you kind of walked through that with your recent transaction, correct?
Yeah, that was pretty much it. It was literally piecing together a puzzle just based on seller need, buyer need, market conditions, those things.
Good. Look for creative solutions. I think we have a lot of those available. We're creative, and consult with your team. And Lisa, there's a lot of people that can help you figure out options, not only for your sellers, but your buyers.
I think the main thing is to take your clients' considerations as the primary objective and find out what they need.
Absolutely. So for our last, I wanted to get through that relatively quick so we could open this up for questions. If you have a question, or you've had a situation that you weren't sure how to handle, or maybe you're in right now, now's the time to unmute and ask questions.
I have one, Jay.
Ask it.
My seller, and he's also wanting to buy. So anyway, looking over their history, they've got some bills they want to pay off. And last year, I'm not quite sure the whole story, but they almost lost their home. So they went through, and where I'm relatively new to Arizona, it's called a Arizona Save Your Home program. Now, is that going to go against their credit, Deb, to apply for a new home loan?
Have they had their credit pulled recently, Teresa, or not?
No.
I can almost guarantee you their credit has been hit. Yeah.
Okay.
Yeah.
Because they're looking at possibly having to rent for a year or two to try to build their credit up. And they do have a home that I'll be selling for them.
Yeah.
So we're trying to decide if they're going to be able to qualify to maybe buy something after their home sells, because they'll have a little equity, or
Talk
have
to a
rent.
lender.
I would talk to a lender before you even list it.
Yeah.
That's what I would do too, because, yeah, they can probably stay in that house for less than they're gonna pay for rent, for sure. And B, why not get them into credit counseling at this point in time? I've got easily 10 people in credit counseling. And that doesn't mean that they have bad credit. It may mean that they just want to get that 620 credit score up to a 680 to 700, for example, and they just have to work on paying down 2 or 3 of their credit cards. And I've got another one where it's a divorce. They're going through a divorce, and the husband was awarded the house, and he hasn't kept those payments current. Well, guess what? Through the divorce, she didn't have him refinance, so that's hurting her credit right now. So I have her in credit counseling simply because of that. So, you know, everything's available. There's no reason to be embarrassed. I always say it's the first thing we have to do is let's just rip that Band-Aid off right now and see where your credit score's at.
And the
Don't
unknown
be
is so much
embarrassed.
worse. Yeah.
It's not a big deal. Let's do it.
Yeah, I just told him, I said, well, we need to research all options that's going to be the best for you. I said, and you may not want to sell, and you may not want to, especially rent. I said, I hate to tell you to go sell your house and rent.
Yeah.
I said, so let's research all the options that's going to come out for your best solution, even if you don't sell or buy for another year or 2, or however you need to do it to make the best options for you and your family. So that's where we're at.
Definitely. Now is the time what I call go deep with your customers. Don't just ask them one question. Really get to the heart of everything that you possibly can.
Okay. All right. Thanks, Deb.
First would be if you get to the closing table for the listing, the sale of that, and you realize that they may not even qualify to rent because of the credit. So it's really important to have that discussion now.
Yeah.
Okay.
Awesome. Who else has a question?
I have a question. My phone is getting ready to die, so I got to make it quick. Back on the subject of selling to relatives, how does that work, or who should I talk to when I'm the personal representative for my parents' estate?
Well, that's different because that is a legal requirement to do that. I think Deb would say the same thing, is that when you're a PR, it's different than just selling to a relative. You're selling by court order, basically.
Correct. But in that estate, I'm going to guess that, let's say there's 5 siblings or whatever it might be, Tess, that you know that within that document, XYZ has to go to XYZ. So I've had that in the past too, where there's been 5 kids, and right there in the paperwork is so-and-so wants to live in it. That's fine. But then these 4 have to get paid this much money.
Yeah.
So then you're working in reverse with the numbers again. Does that kind of help or not?
Yeah. It was more or less what I thought. I need to talk to somebody specifically, and I don't want to just talk to the mortgager, mortgagee. I don't want to talk to the lender because they're going to give me what benefits them, not what benefits the estate. So anyway, my phone is dying. It's overheating. I got to go.
Okay.
Thank you.
Thank
See
you.
ya. All right. Anyone else have a question they need to, or the question they want to ask? You got experts. Take advantage of them.
I have a question, Deb. If you have somebody coming in from out of town right now for a second home, what kind of programs do you have available for that?
Conventional, they can get in with as little as 10% down. So
Okay.
some people were surprised by that you can buy a second vacation home with 10% down.
That's good to know. Yeah.
It is a conventional loan. Yeah.
That is good to know.
Mhm.
All right. Last call. 11:53.
Deb, does that scenario fall into an investment loan, or can go straight conventional now?
Straight conventional always has been that way. Your second vacation home is treated like a owner occupied house.
Gotcha.
So your rates are good. You have to put at least 10% down though.
Good to know.
Perfect. Yeah, one of my kids may be doing that. So.
Woo! All right, anyone else? Okay, guys. Well, I appreciate you attending. Thank you, Lisa. Thank you, Deb, for giving us all your knowledge. And I will look forward to seeing all you lovely people tomorrow morning on our quarterly meeting.
Thanks
Have a
for
great
having
day.
me.
We'll talk to you soon.
Thanks,
Bye.
Jay.
Thanks. Bye.
Bye.